your roadmap to the latest in auto. Welcome to Highway Herald. Today, we're stepping away from the garage and into the world of geopolitics, because China's latest financial maneuver could have a massive impact on the global economy. Gold has always been more than just a shiny metal. It's a symbol of stability and power. But now, China's aggressive push to increase its gold reserves is sending shockwaves through financial markets and raising serious concerns in Washington. Could this gold-buying spree weaken the dominance of the US dollar and reshape the balance of global economic power? Let's dive into the details of China's bold strategy and what it could mean for the future of global markets. Number 5. China's gold rush, a strategic power play. China's aggressive push to increase its gold reserves is more than just wealth accumulation. It's a calculated geopolitical move. Since the 2008 financial crisis, both China and Russia have been hoarding gold to reduce their dependence on the US dollar. The People's Bank of China, PBOC, has increased its gold reserves for 17 consecutive months, cementing its position as one of the largest gold buyers in the world. By December 2024, China's gold reserves reached 73.29 million ounces, up 300,000 ounces from November, a significant increase in just 1 month. This comes after Beijing paused gold acquisitions for 6 months, only to resume aggressively as trade tensions with the US escalated. Gold's stability makes it a strategic asset. Unlike fiat currencies, gold holds its value over time due to its scarcity and universal acceptance. Beijing's goal is clear: stockpile gold to shield itself from future sanctions and reduce reliance on the dollar. With the yuan under pressure from weakening trade and market volatility, gold provides a stable foundation for financial independence. But China's aggressive gold strategy isn't happening in isolation. It reflects a larger trend in how nations are responding to global economic uncertainty. Number 4. Gold's rise as a safe haven asset. Gold's recent surge in value reflects more than just China's buying spree. It's part of a broader trend fueled by global instability. At the start of 2025, gold hit a record high of $2,849.05 per ounce as trade wars, inflation, and geopolitical tensions in Ukraine and Taiwan drove investors toward safe haven assets. Central banks have responded by increasing their gold reserves. The World Gold Council reported that global central bank purchases in the first half of 2024 hit an all-time high, with China and Turkey leading the charge, followed closely by India. This shift signals a growing effort to reduce reliance on the US dollar and diversify financial reserves. Analyst Ross Norman noted that gold's rise reflects market anxiety about the longevity of the trade war and its potential to destabilize the global economy. Beijing's growing gold reserves are more than just a financial safeguard. They're a geopolitical tool. If China backs the yuan with gold, it could enhance the currency's credibility and weaken the dollar's dominance in global trade. But China isn't stopping at just buying gold. It's also discovering new sources of it within its own borders. Before we rev up the next segment, make sure to hit that subscribe button and give us a like. Your support drives us to bring more high-octane content to auto enthusiasts like you. Now let's crank up the power and dive into our next point. Number 3, the Wangu gold deposit, a game changer for China. China's gold strategy got a major boost with the discovery of the Wangu gold deposit in Hunan province, one of the largest gold finds in recent history. Estimated to hold up to 1,100 metric tons of high-grade gold ore, the deposit is valued at around $83 billion, strengthening China's grip on the global gold market. Initial exploration revealed 330 metric tons of gold, with further analysis suggesting another 770 metric tons could be buried deeper underground. The ore's concentration of 138 grams per ton is significantly higher than the global average, making it a highly valuable resource. This discovery cements China's status as the world's largest gold producer, accounting for 10% of global output. Increased domestic production allows China to reduce its reliance on imports from countries like Australia and South Africa. It also strengthens Beijing's position in trade negotiations and provides a cushion against market volatility, helping stabilize the yuan. While the environmental risks, including soil erosion and water pollution, are considerable, Beijing is expected to press forward. The strategic, economic, and geopolitical benefits of securing this gold supply are simply too significant for China to ignore. But China's gold reserves aren't just strengthening its financial position. They're also challenging the very foundation of the US-led financial order. Number 2, a challenge to US financial dominance. China's aggressive gold accumulation signals a strategic challenge to the dominance of the US dollar. The dollar has long been the world's reserve currency, supported by the strength of the American economy and its financial markets. But that dominance is weakening. According to the International Monetary Fund, IMF, the share of global foreign exchange reserves held in US dollars has dropped from 71% in 1999 to just 59% by the end of 2024. While the dollar remains dominant, the global shift toward diversification is clear. China's growing gold reserves position it to create an alternative financial system, potentially backed by gold. If Beijing reduces its holdings of US Treasury bonds, or even hints at doing so, it could destabilize global markets and increase borrowing costs in the US and Europe. Other nations are following China's lead. Turkey and India have also increased their gold reserves, reflecting a broader shift away from reliance on the dollar. If this trend continues, the global financial system could evolve from a dollar-dominated model to a more decentralized structure, where gold and alternative currencies play a larger role, a shift that could redefine global economic power. But this financial shift could have an even bigger impact. It could fundamentally alter the balance of global trade. Number 1. The global trade shakeup. China's gold strategy isn't just about financial security. It's about reshaping the balance of global trade. If Beijing successfully backs the yuan with gold, it could fundamentally alter how commodities are priced and traded. Oil, metals, and other key resources could start being priced in yuan rather than dollars, a seismic shift in the global trade landscape. This would give China significant leverage in trade negotiations. Countries that rely heavily on trade with China, including those in Africa, South America, and Southeast Asia, could be encouraged to hold yuan reserves instead of dollars. This shift would weaken the influence of Western financial institutions such as the International Monetary Fund, IMF, and the World Bank, giving China greater control over global financial flows. The transition wouldn't happen overnight, but the momentum is already building. Beijing's increasing gold reserves reflect a long-term strategy to create financial independence and establish a multipolar global financial system. If China succeeds, it could fundamentally shift the power dynamics of global trade and finance, and challenge the very structure of Western-led financial dominance. The road ahead for China and the US. China's aggressive gold accumulation is a strategic shift with global consequences. The Wangu deposit strengthens China's position in the gold market, while rising reserves provide a hedge against economic instability and US sanctions. If China backs the yuan with gold, it could weaken the dollar's dominance and reshape global trade dynamics. The big question is, will the US respond with its own strategy, or will it let China redefine the financial order? The outcome could determine the future balance of global economic power. What do you think? Is China's gold strategy a masterstroke or a risky gamble? Could this signal the end of the dollar's reign? Let us know your thoughts in the comments below. And don't forget to subscribe to Highway Herald for more updates on global markets and financial shifts. Thanks for watching. We'll see you next time.